Hello, fellow traders. 'Tis I, TheRumpledOne, coming to you Thursday, August the 20th. The year's 2020. Let's talk trading. Exit signal with Wall Mall. Before we get into the exit signal discussion, just remember, these videos are for educational purposes only. Your results may differ from mine. Trading is extremely risky. You can lose all of your money. If you need trading, investment, or financial advice, seek the advice of an accredited financial professional. So, Wall Mall, let's talk exit signal.
Yes, I think that in a lot of ways that's actually probably even more important than your entry signal. You're going to get into a trade for whatever reason you're going to get into a trade. And the thing is, how do you get out of the trade? That's got to be the plan. How am I going to get out? And there's two sides to your exit signal. The exit signal on if you're losing and going and mitigating your losses, and then of course the nicer side that we all like to talk about, getting out of a trade and trying to maximize as much as we can get out of it. So there's really two topics there that are really on the table. But I think today we wanted to go and talk about getting out, on the positive side. I will go and tell on myself. I tell a lot of stories where I make mistakes, but I'll actually tell a story for once where I actually was on the top side of it. Yesterday I was able to catch the 50 move pip down. Actually, I think it moved 60 and I got out with 50. And then not too long, about an hour or so ago, I went and grabbed 45 pips on the way down as well. So, and I just used, my standard way of using that, and that was my 10-5-1 and using the mid dots that we've been talking about over the last couple of days. And, I could have actually gotten more on today's trade, but I'll admit that the bad side of it was I bailed a little bit early because I just didn't like what I saw. But if I would have stayed in and followed the mid dots, I probably could have picked up another 10 pips or maybe even 15 pips on today's move. But okay, that's can't really complain.
Yeah, okay, so you were talking about mid dots. So I'll have to bring up a chart with the mid dots. But it's funny, Walmall, you said something about the exit being more important than the entry. And where I've stood on this, if you go back, I always say the entry is more important. Reason being is some entries have a higher probability of allowing you to exit with a profit than others. But yeah, that's a discussion for another day.
Yeah, you're absolutely right about that. Well, I guess what I'm saying is once you're in the trade, the most important thing is the exit.
Yeah. But yeah, and the other thing is, it's one thing I mentioned right before we actually started recording the video was what we do. We being you and I, we call it scalping, but technically it's not scalping. Scalping is a whole different method. We're just grabbing pips. We're grabbing a couple pips here and there, but between the past 2 days, you had a couple of really good hauls. You filled the bucket. You didn't just take a handful. But the thing
doesn't happen very often.
Yeah.
It does happen from time to time.
Yeah, but the thing is that what we're doing, our method of trading, pip grabbing, it doesn't lend itself to the principles of swing trading. In swing trading, many times you look to the chart for your exit signal more than you put your stop loss in, but then pretty much that's it. You're looking to make 2-to-1, 3-to-1, or whatever you put on for the trade. Versus us, we just grab a pip here, a couple pips there, and that's it. We're not looking for some type of performance. We're not really looking for the chart to tell us when to exit. We're looking for the P&L to tell us to exit. And
right.
Yeah, and so there's things like, oh, you got to let your winners run. And maybe in a swing trading type of method that would work. But once again, how we're doing it, we're not set up to take a bunch of 10, 20, 30 pip losses in a row looking for that 200 pip move. No, we're looking to maybe, take maybe one or two, 10 pip losses in a row max And then we know we can scratch our way back, 2 to 5 pips at a time.
Right, and that's exactly right. So, it's a different method. It's a different way of looking at things. And I think you can make money either way. It's just that the method that we're using here is not that. We're not looking for that 2-to-1 or that 3-to-1 risk reward, a ratio that everybody goes and talks about and says that you need to get. I'm looking at it as like, okay, I know statistically, and I feel like I beat a dead horse here sometimes, but I know statistically that every hour on the pound dollar, it's going to move somewhere around 20 pips. Minimum is going to move somewhere around 20 pips. Are there some hours that don't? Yeah, sure. That means it can't fit into a 10 pip window. If it can't fit in a 10 pip window, I got a chance to make some money. So that's the importance of the entry part. Now, okay, if I know that it's going to move that 20 pips in the hour, then I also know that part of my exit strategy has got to be something along the lines of, I'm sitting here right now with the current hour, it's moved 28 pips. That's in the 85th percentile. That tells me it's probably time to get out of Dodge or think about getting out of Dodge real quick, because it doesn't move that much all that often. It did in the previous hour, but generally speaking, it doesn't move that many bips, and so you now all of a sudden got to sit there and start thinking about how do I get out, so I start looking at the chart and saying, and when I say looking at the chart, I'm not looking at the chart like a swing trader looks at the chart. I'm not looking there and saying, okay, there's some support there. I need to go and jump out between that support. I'm looking at more at what is price doing right now? How is price reacting? Because if I'm only up 5 pips, you know what? That's 5 pips in my pocket. And let's say I go and trade at 4 pips, 4 lots per pip. Okay, what does that mean? That means I'm sitting there right now with about $200 in my pocket. Do I want to see that $200 be thrown away, or do I want to take the chance? You got to make that decision. And so you're making that kind of decision a little bit on the fly, but mostly you should be planning that out in your head. When do I get in? When do I get out? What does my exit playbook say to do? My exit playbook says that, hey, I made 5 pips. Time to take some off the table. We'll take some off the table. If my exit playbook says, nope, I'm going to just go and move my stop loss to +1 or break even, fine, do that. But lay that out ahead of time so that it's not really thinking as much as watching what the market's doing and reacting to what the market's doing based on what your playbook tells you to do.
Yeah, exactly. So I've got a chart up, M5 chart, that shows the TRO mid dots. And so right here, we're looking at that huge drop. And as you can see, price, fell below the mid dot and stayed below the mid dot. And so if you're trading that method, the chart's telling you to stick in. But if you look here, we had a 3 ball on the bottom here, and then price crossed above the mid dot on that same candle. Now the next candle opened above the mid dot, and that's like, for me, that's an immediate trigger. For you, you're looking to see that high being broke. But either way, we both would have been in the trade, and that trade probably, let's see, open 90.5, so that means I would have been in maybe at 92 based on the spread. And then if I'm in at 92 and it actually hit a high of 96 and started coming back, well, once again, there's your 4 pips. It's like, you might let it take a pip back. And so worst case, I would have been out at break even +1.
Right.
But I think a lot of times, not to, denigrate the swing traders, but I don't know how many people are trading full lots in those swing trade positions, because if it goes, a full lot's going to be $10 a pip. And if it goes against you 10 pips, that's 100. If it goes, are people really risking $100 or $400 on a trade, on a swing trade like that? I don't know. If anybody out there is, pipe in on the YouTube comments or on the Facebook, because it seems to me most of the people on these forums talking about it are, they're trading something like 0.01 as opposed to 1.0.
Right, they're trading very, very small, and you understand why, because the reality is, if you can only, based on your account size, let's say you have $1,000 in your account, and let's say you're willing to go and, risk 2% of your account.
Yeah, $20.
Well, $20. So what does that mean? If you're going to go and if you got to go put a stop loss somewhere around, let's say 50 pips, well, guess what? You're now talking about 0.0 something.
Yeah, you're talking about what, a 50 pip, or what'd you say, a $20 risk, right? And if with 50 pips, you're talking what? Are you even talking a dime a pip?
You're talking about basically a nickel a pip is what you're really talking about there, and so you're sitting there and like, well, the problem with that is that's fine, that you can make money that way, there's no question about it, but the reality is that you got to go and sit there. Think about this, we've talked about this stuff before. You make it minimum wage. The most swing trades, you got to sit there for hours for it to come to fruition to be able to move that far. Because if you're looking for a 3-to-1, that means that thing's got to move 150 pips. Well, typical day on the pound dollar doesn't even move 150 pips. So you might be in that trade now for 2 days. And let's say you get the 3-to-1, you risk $50, and it took you
$20.
2 or 3.
No,
$20. I'm sorry.
Yeah.
Yeah, you're right. So you risked $20, okay, and it took you 3 days to go and make 60.
That's worse than minimum wage.
Exactly. That's exactly right. And so, now if you happen to have an account that's, a $20,000 account or something like that, then absolutely that's when you can start making some real money on that. But you got to go and build up an account worth $20,000 or $30,000. You can't do it with a $1,000 or $5,000 dollar account. It's just that you can't make, at least I can't make enough money to live off of. And so you have to start thinking about what is your risk reward, what not your risk reward, but what is your method for getting out of the trade, and what is your method for getting into the trade, because that's what's really important, and that's why I trade the way I trade. I know we kind of went a different direction on this video a little bit, but that's the reason why I do it, because I can sit there and just pop a couple of pips here and there, and if I put enough power behind it, that's just what you got to do. And the thing is, okay, if let's say I go and risk $100, but the thing is, because of the way we're trading it, based on what my goals are, well, guess what? I can make $100. If I risk 100, I can make 100. It's only 1-to-1. But the thing is, my stop loss is only sitting out there at 10 pips.
Right.
That means to go and make that 10 pips or make that $100, I only have to move 10 pips. I don't have to move 150 pips.
Yeah, and you don't have to do it all in one trade either.
That's right. And what do you think is more likely to occur? Now, some detractors may go and say, well, you're putting more risk on you because you have to sometimes make multiple trades. Yep, I do. And that's a risk I'm willing to take. And that's okay, and that's just, getting to your point earlier in the video where, the entry is more important. Well, that's where that comes into account, because we're doing statistical trading, and we know that, statistically, this is what's going to happen 60%, 70%, 80% of the time. So knowing that, that's okay. I'm willing to take that risk on because I've got the statistics behind me backing me for what I do. And it's sort of like even on my exit stuff, the reason I was able to get away with what I did in terms of making all those pips on both those days is I followed those mid dots, just like TRO was just saying. I just followed the mid dots all the way down. Now, today's trade, to be honest with you, what happened is I'm going to blame this on you, TRO.
Okay, well, you got about 20 seconds to do it.
Okay, all right. You called me, so I got a little bit flustered because of the phone call coming in, and at the same time, I saw it was crossing the mid dot, but then it turned right around and then it's closed below the mid dot. Should have stayed in, would have picked up another 15 pips. That shows you, you got to go and, if you're going to pick a method, pick the method and stick with it.
Yeah. So, fellow traders out there, just remember, you have to choose the exit plan that works for you. because it's not what you trade, it's how you trade it. So go out there and drain the